Hi everyone. Following on from my last video, as I said, I'm going to go through some looking at SR zones and SD zones within SR zones and how we can use that to pinpoint exact sources of the institutional supply and demand within the SR zone itself. Okay, so I'm going to look through three examples on this video. Okay, so example one. This shows a resistance zone being broken here. Price then came back to test this as support, i.e. this is an SR pivot zone. Okay, so what we want to ideally do now is pinpoint the exact moment where the decision was made to break this resistance zone. So here, within this zone here, where was the decision made to break this SR zone, okay? Okay, and the way I'm going to do this is to zoom in into a lower time frame, okay? So if I'm basically going to zoom in to this breakout area here on a lower time frame, okay? This is a 1 minute time frame. The chart previously, I believe, was an hour, 1 hour time frame. Yeah, 1 hour time frame. So this is a 1 minute time frame. Okay. Now we can see that this consolidation zone here was the most likely area where the decision was made to have a run at the higher SR zone and have a breakout. Okay, so this was the most likely area where the institutional demand came into the market, caused the supply-demand imbalance, and price attacked the SR zone or the resistance zone, and we had the breakout. Okay. Okay. So if I then scroll across to where we had, if I scroll back, so I've identified within this breakout zone here, we've zoomed to the 1 minute time frame. We found the most likely, I mean, nothing's ever 100% in trading, and there's only, it's a 1 minute time frame. It's a very small consolidation, but it's the most likely area where the institutional demand came into the market. Okay, so now we're scrolling over to the 1 minute time frame for when we had the retrace back, the first retrace back to the former resistance turn support zone. Okay, so this is scrolling across from the previous chart. Okay. And we can see this was where the demand was met on the first retrace and price subsequently bounced. Okay, within this 3 pip zone that we identified on the 1 minute time frame by looking at the breakout area, we identified the exact point, the exact 3 pip zone where price was then met with demand again on the first retrace. Okay, so that's example 1. I'm going to look at a second example now. This is an hour time frame again, showing a supply-demand zone, i.e. a turning point in this case, at a swing high. We can see that when price returns to this zone and forms a double top formation, price then retraces back down. So again, we want to look within this zone. We can see this is the zone where we had the strong supply exceeding demand imbalance. So we want to zoom in to see, can we pinpoint where the decision was made within this consolidation, where the institutional supply came in to make the decision for the market to turn down. Okay, so this is obviously a 1 hour time frame. I'm going to zoom in to the 5 minute time frame in this case. Okay, so in this case we can see that the most likely zone where the decision was made for the SD imbalance to incur was this zone here. Okay, we can see that when price left this zone, this is where price subsequently moved down and formed the new trend. Okay, and we can see that we've had a very high momentum break in the process. So this just suggests that it was within this zone somewhere where the institutional supply came into the market to cause the break back down below and the revised trend. Okay. Okay, so if we zoom in even further into the 1 minute time frame, so if we look at this shaded zone on the 1 minute time frame, okay, well this is the shaded zone. And now if we look into the 1 minute time frame, we can see we had supply demand imbalance. We went back down to the former support level, then we came back out, and this was this was originating out of this zone was where the breakout occurred. Okay, our price following the breakout of here, price then broke the support. We had to break out, quick retest, and this is where we subsequently moved down. So we can say within this 5-minute zone is where we had the most likely to have the SD imbalance. Within that, even if we're really trying to pinpoint it to the highest degree of accuracy, we can say that this 1-minute zone here, this 2 pip zone, is most likely where the institutional supply came into the market. Okay. Oops. Okay. So if I now scrolled across 84077 to 8409 to where we had the double top formation. Again, this is the 1-minute time frame. Okay, 84077 to 8409. We can see that when price retraced, multiple attempts at this area, but this was where again price was met with supply exceeding demand imbalance, and this is what caused a subsequent double top and price moving retracing hard away from that double top formation. Okay. So we've identified within a less than a 2-pip range, the most likely point where where price was likely to meet with supply on the first return to that supply area. Okay, or the swing high, i.e. the double top formation that formed. Okay, that's the second example. We move on to the third example. Okay, this is a 1-hour time frame again, and we see a clear resistance zone. We have a breakout. Price then comes back to return. Price then returns to this resistance turn support zone. This is an SR pivot zone. Okay. Now, if we firstly, this is the third attempt or fourth attempt at this resistance zone, and as from previous videos I've said, we've concluded that the more times price hits a resistance zone or supply demand zone, the weaker it's becoming. So it's no surprise that we eventually see a breakout of this resistance zone. So again, can we zoom in to try and find the source of the breakout, i.e. where the initial supply demand imbalance occurred, where the decision was made, where the institutional demand came into the market to cause that breakout. Okay. So this is a 1-hour time frame. If I zoom into the 15-minute time frame, we're looking at that breakout area. Okay, and we can see the consolidation here is where the decision was made. This is where the institutional demand came in, because if you look at how price reacted when it came out of here, 1, 2, 3, 4 out of 7. Sorry, 1, 2, 3, 4, 6 out of 7 bars following the breakout of this area were bullish, and we've had to break out the SR zone, the quick immediate retest, and then prices continued higher. Okay. Now, if we take a closer look at this area on the 1-minute time frame, okay, this is if you look at the prices, 9153, 9164. This must be dollar Swiss franc, I believe. 9153, 9164. This is the 15-minute zone on the 1-minute time frame. Okay, so this is the zone. So prices come out of that zone. We're then at the SR zone, and we can see price came back, tested this area here, shot away, but then it came back. This is 1-minute time frame, so this is more like an immediate retest. This is the immediate this is this bar here. Okay, this is the immediate retest on the 15-minute time frame, looked at on the 1-minute time frame, and we can see a very strong bearish move into this was quickly rejected. What does that tell you about this area here? That tells us there was a huge amount of demand to overcome this supply at this zone here. Okay, so in this example, I think what I would be concluding is, okay, we've got two potential zones. We've got the source of the initial supply demand imbalance, which led to the breakout. This was in this 15-minute zone here between 9153 and 9164. But then we also have a strong demand coming in at 9169 to 70 on the immediate retest, and the fact that the strength of the turning in price in terms of the very big momentum move down was quickly rejected shows the strength of the demand. So I would say we have two potential zones here, okay, which if price came back, we could expect further demand to come in here, and if it didn't, or if it did and came back down again, we can expect further demand come in here. Okay, this is the source, and this is further demand just above. Okay. Now, if I firstly scroll back again, so now if we've identified two potential points, the source and a further demand, very tight demand band just above within the SR zone. Okay, so now if we look at the first retrace back to this zone, this was actually an NFP move. If you don't know what NFP is, it's one of the biggest news events in the economic calendar. Non-farm payrolls, US employment data. One of my future videos, it won't be in the free section, it will be on news. But simply put, if you don't understand news, if you don't follow news, then you're certainly missing a big thing when it comes to price action trading. You need to be following news. You need to be understanding news, because it's a variable that can affect your trades both negatively and positively. Okay, and it's also a source of trades itself if you're that way inclined and like to trade based on news. Okay, so that there is no excuse for not knowing what NFP is, as far as I'm concerned, if you want to be a professional price action trader. Okay, so we're scrolling forward to look at these two zones that we identified here, and this is NFP. Okay, so this is a massive high momentum move down. Okay, into our zones, one of the biggest news events in the monthly calendar. Okay, so let's go back. This was the 15-minute one. Remember, this was the 1 minute time frame, and now so we got 5.3 to 6.4, 6.9 to 70. We're scrolling forward to the 1 hour time frame first retrace, and this is what happened. Okay, this is an NFP move. Okay, these bars down here, these are NFP moves. Okay. So what does that mean? It means it's very strong momentum moves. Okay, so what actually happened? Okay, we can see this, 2 pip demand zone. This is where we had demand again. Okay, we had an overshoot, which is unsurprising considering the strength of the move down. We needed to find some liquidity, and we had a strong rejection of the move down, and we went back up to the source of the actual move down, i.e. the NFP news. Okay, and then we came back down again, and what happened? We found demand within our 15-minute zone. Okay, so what we identified before was actually correct in terms of we had two potential demand zones, and both of them held. Okay, on the 1 minute time frame, massive rejection of the original news-based move. Price came down again, and again price was rejected. Okay, now if I zoom out again of the next chart. This is the 15-minute time frame. Sorry, no, this is the 5-minute time frame. This is the initial rejection of this zone here. Price closed above it on the 1 minute time frame. If you remember from the previous chart, thus it held as support, and we had the rejection back up to the cause, or where the news-based move originated from. We came back down again. It's looking if we're going to break out of here, doesn't it? We've kind of got a wedge pattern where it's looking as if we're putting price pressure onto this zone, but no, it held this supply demand zone held, and price eventually broke back upwards. We had a new trend forming back upwards. Okay, so that's 3 examples I've been through of essentially finding SR zones and finding the cause of the breakout, and using that to determine where it's most likely we're going to find the supply or demand again on the first retrace. Okay, so zooming in onto the lower time frames, the 1 minute, 5 minute time frames, to pinpoint within a few pips the exact source of the institutional demand or supply that came into the market. Remember, supply and demand is where the orders are stacked. Support and resistance is the average zone of where the market has rejected price in the past. Okay, so that should be very clear to you now, the difference between support and resistance, supply and demand, and how using supply and demand within support and resistance zones it can be a very powerful trading strategy. Okay, I haven't really talked about the trading strategies yet, but you can see where we're going with some of this knowledge. Okay, hopefully. What I would say is, go away and do this yourselves. Go and see if you can find the reasons, the sources of breakouts and first retraces on well-defined support resistance zones. I would say that nothing's 100% in trading, and we won't always be able to identify where the support, where the decision made, it won't always be very clear. We're looking for, where it's clear that the decision was made. And how can we find? How do we know if it's clear? It's because we have a good supply-demand imbalance. So if I scroll back, things like this, a massive rejection of a big move down. That's clearly a demand zone. There's nothing. The only thing that's happening here is demand is coming to the market to overcome this massive supply based move. Okay. Things like zones like this. If we didn't have this zone here, then we wouldn't be able to pinpoint with more accuracy within this 15-minute zone where the supply demand imbalance originated from. Okay. And it's not, you don't always get it clear, okay? But what we want to wait for is the ones where we can identify with good accuracy, we can pinpoint and be confident in it because of what price is telling us, okay? So my recommendation is to go over your charts, spend hours and hours of going over support resistance zones, supply demand, and find supply demand imbalances and find good support resistance zones and watch how price reacts, okay?